Monday, January 30th, 2023, Maneco 64, Home of Alternative Economics and Contrarian Views. Today we're going to look at how faith and confidence in the dollar might be lost from within, and by that I mean from domestic troubles in the US and not from other countries like China, Russia, or the BRICS trying to get away from the dollar, even though I think that's still very important. Before I start though, I'd like to say we're going to be back in England Wednesday evening, so normal schedule will resume for the videos from Thursday. Yes, it's been a bit patchy, but trying to take a week off to see the family. We've been doing a lot, and I've been skiing a little bit. I skied yesterday quite a bit. Yesterday morning was a beautiful day, as you can see here. Skied from 9 to 12. That was the best time to ski, because after 12 the queues got really long. A lot of people came to ski on the weekend. But yes, yeah, we will resume normal procedures from Thursday. So yeah, the threat to the faith and confidence in the dollar, because fiat currencies, they're all about faith and confidence, because the term fiat means by decree, and if enough people don't believe in the currency anymore, faith and confidence is lost. And ever since 1971, the current system has been able to be kept going, and I think despite the fact that let's say the debt is growing so much, they've still been able to keep it going. But now it's a matter of the debt that is the problem. And here I'm talking about the US debt limit, and many people will say, well, it always happens, they solve it at the end, they use brinksmanship, and then eventually something is found. But I think this time around it could be the one that really breaks the camel's back, so to speak. And it's not me saying that, it's actually major Wall Street firms like JP Morgan and Goldman Sachs. It doesn't get that more major, does it? They're probably one of the biggest shareholders in the New York Fed as well. I saw this story a few days ago in the FT, January 27th, 2023. So it says, Wall Street warns of riskiest U.S. debt limit showdown since 2011. JP Morgan and Goldman Sachs fear repeat of confrontation that resulted in downgrade of country's credit rating. So let's go through this article. I think it's very important, and you'll see what I mean by this being serious. It says Wall Street banks, including JP Morgan and Goldman Sachs, are warning that Washington is heading for the riskiest debt ceiling confrontation since 2011, when the U.S. lost its risk-free credit rating. The fight over the debt ceiling could be the most important issue facing the U.S. economy in 2023, according to a JP Morgan note to clients on Friday. Congress has had many tussles over the lifting of its borrowing limit in recent years and has never defaulted on its debt. But given the particularly fractious state of the legislative body, a deal to stop the world's biggest economy from defaulting on its debt may be harder to seal this time, said JP Morgan's chief U.S. economist Michael Feroli. The implications of a default were hard to predict, added Feroli, but could plausibly result in a severe recession. Even the best case will probably see the sort of brinksmanship that occurred in the 2011 debt ceiling crisis, he said. I thought that was significant. He thinks what happened in 2011 is the best case scenario. And yeah, what happened to gold in 2011 when we had that debt ceiling crisis? Well, it went up from like 1,400 to 1,900 in a matter of months. So it's interesting to keep that in mind. So let's continue here. The Treasury bond market is the bedrock of the global financial system and a haven. I do this, I put that there because I don't think it's a haven, but they do, for central banks and investors globally. A debt default would in all likelihood have cascading implications across multiple asset classes and geographies. And I think that's one of the reasons why countries like China, Russia, and even Japan, they've been decreasing their holdings of treasuries, not just because of the fact that the U.S. administration has been using the dollar and treasuries as a weapon instead of a trade instrument and settlement instrument, but because I think people in the know in these countries, they see this and they're concerned, keeping all their eggs in one basket. And that's why we saw the most amount of gold bought in 2022 since 1967. Anyway, let's continue here. It says the government last week started taking extraordinary measures to meet its obligations after the country hit its 31.4 trillion borrowing limit. The Republican majority in the House of Representatives has demanded deep budget cuts in exchange for raising the debt ceiling. The White House and Democratic majority in the Senate say that is not an option. So, yes, apparently the reason for the White House and the Democratic majority's stance in the Senate is that this is for past spending that has been agreed upon. But yeah, as I said, maybe this is what breaks the camel's back, because you can't keep the debt growing like this. I mean, we're at 31.4 trillion, I think. Let's see. Yeah, well, right now it's at 31.5 in the debt clock. But yeah, it's just not sustainable, and the economy is not keeping up with it. And maybe this is what the United States and the West and the world needs, a total collapse of this system. Yes, it will be painful, and it is painful already. We're all feeling it. But in the long term, I think that would be the best thing to happen. So, as the chief economist of JP Morgan said, very difficult to know what will happen to the markets. But one thing I do know is that I'd want to have something outside the system, i.e. have some gold and silver or whatever other asset you want to have, tangible or physical asset outside the system. So I'm not going to go through the whole article here. I'm going to put it in the link, a link below in the description, archive.ph link, so you can read it all. It's not a very long one, but I thought this was interesting here. At the end, it says Maureen O'Connor, global head of high-grade debt syndicate at Wells Fargo, said the debt ceiling this year smacks a little different than some of the debt ceiling drama we've dealt with in the last couple of years. And I quote her here at the end, "When we talk about black swan events, this is one of those," she added. So yeah, it could be a huge black swan event, even though it happens every year, almost every year, this debt ceiling drama. But it could be a black swan in that it actually explodes and yeah, unravels this whole debt-based system, because this is what it's all about. It's like lifting your credit card limit every 18 months or so, while your income doesn't grow like your debts. And there comes a point where even countries can't afford it anymore. So that's why I'm saying here that loss of faith and confidence in the dollar could come from within, even though I think foreigners, as I've said before, they've twigged onto it, and that's why they're moving to a new system. Will it be a BRICS currency? I don't think so, but they could use gold as the main reserve to settle trades amongst each other. That's what I think they'll do. They want something. They will want something better than the dollar. They'll want neutral, apolitical money that has been good for a few thousand years, and that's gold, and hopefully some silver too. So before we look at the markets, I've noticed a lot of people have been asking in the comment section, and I haven't been as busy responding, of course, because I'm away on holiday. But a lot of people are asking about the US debt clock, because there's a section here where it says dollar to silver ratio now, and it says 0, and there's a little asterisk on it. So if you hover above it, it says the US M2 money supply is declining year over year. So I think that's why they've zeroed it out, because the calculation there is the year over year increase in the US money supply divided by the yearly world production of silver ounces. So as the M2, you can see here from the Fred chart, is been going down, they're not calculating it because it's a negative number. And the same thing goes for gold, because M2 is gone negative year to year. And then they still have the other ratios, which are still positive. So I don't think there's anything nefarious or anything we should be concerned about. And I usually, to be honest, don't look at these numbers of these ratios that they show up in the U.S. debt ceiling page, usdebtclock.org. So it's 9:14 a.m. Central European time. I'm not in the UK, so it's 6 hours ahead of the US. So let's look at the markets. So we've got spot gold at 1923.70. That's down just over $4. High's been 34, low has been 22. Silver's up about 6 cents at 23.65. High's been 82, the low's been 52. So the Dow futures is down 175 points, 0.5%. NASDAQ 100 is down almost 1%, 106 points. The S&P futures is down 0.2%, or 27 points. To the currencies, sterling is down about 0.1%, 123.84. The euro is up 0.2, 108.86. The dollar is unchanged versus the yen, 129.90. Dollar yuan, dollar's down 0.1 at 6.75. And I'm sorry, I've got a bit of a cold, pretty rough cold actually, but it's getting better. Let's quickly look at the dollar ruble. Dollar's at 69.20. It's up about 0.25%. And now to the general commodities. Well, actually to the other currencies, excuse me. Aussie dollar is down 1/3 at 70.81. The dollar is up 1/4 versus the Canadian dollar at 133.45. And the Kiwi dollar is down 1/4 at 64.75. Platinum is trading at 1,012. That's down a couple of dollars. WTI crude is down 0.2%, 79.23. Brent is down 0.5% at 85.90. High grade copper is down 0.5% at 420.60. And we're going to look at the bond markets. The 10-year yield is at 3.54. That's up a couple of basis points, and it looks like the market is discounting a 25 basis point hike by the Fed on Wednesday, the 1st of February. So that's priced in. I think there's like a 95% chance. So that's what I think they'll do. The Japanese government bond market, the 10-year yield reached 0.48 today. It has been as low as 0.37 recently, So there's been a little pressure there. I think very soon investors are going to test that 0.5 level again, and we need to keep an eye on that. So, yeah, so with that, I'm going to say goodbye to you all and wish you all a great day. And I'll try to keep the videos coming as much as possible. And as I said, we'll be back to normal from Thursday, the 2nd of February.